Hello everyone, we have Mr. Sunil Singhania with us and thank you so much sir for talking to us. We were talking about the big India opportunity right now. So what according to you are the big opportunities on the sectors at least for the next 5 years when we take India into consideration as well as its economy wherever it's headed?
So, I was mentioning, I think the number of people who are in that consumption kind of income bracket right now are approximately 50 crores. Our view is that in the next 7-8 years, that 50 crores will become 100 crores because more and more people will go into that bracket of 6 lakhs and above income. So, we believe that discretionary spending is obviously going to flourish a lot in India. And then you have the obvious, the infrastructure and the manufacturing theme, which are also very, very solid.
Sir, what about the kind of consumption growth that we are seeing, because it's more of a K-shaped recovery that we are seeing compared to an overall recovery. What do you have to say on that?
No, it's very clear. I think last 2-3 years inflation has been very high, and then interest rates have moved up quite a bit. So EMIs for a lot of people have gone up, and obviously the cost which we are paying for the basics of life has also gone up. And I think when you have that, obviously some of the consumption items in your monthly expense bucket have to come off. So the lower strata obviously has been facing that a lot, but I think we are at the bottom as far as I would say the peak as far as the inflation and interest rates are concerned, and hopefully as the economy grows, the income levels will also grow. So we are quite optimistic that with a little bit of a lag, we should start to see consumption picking up again.
So when we talk about equities, with the bull run that we are seeing right now, many worry that it is obviously very rich in valuations. So do you see some sort of correction happening, or how do you see the market going forward?
I think people talk about a bull run. If you actually see October 21, Nifty was at 18,500. January 23, it was still 18,500. And today we are at 19,500. So in 1.5 years, we have moved up like 7%. Year to date also, we are up 7%. If that is called a mad bull run, then I disagree with it. Having said that, there are pockets of stocks where there is exuberance, and one has to be very, very careful. Particularly the broader market stocks have doubled, tripled in a matter of like months. I think we have to be very careful as investors that we don't carried away in that momentum. As far as valuations are concerned, I think profit growth has been phenomenal. Next 2 years also profit growth looks to be pretty decent. And therefore on an FY25 basis, we are approximately 18.5, 19 times earnings, which is not cheap, but which is not in that over exuberant kind of a zone. So yes, corrections can happen, but we don't see very deep corrections.
Okay. Thank you so much, sir, for your time.
Thank you.